Roku and Cathie Wood had a nice week this week with Roku prices up roughly 20% on earnings. Now, Cathie Wood owns roughly 10 million shares worth almost $1 billion, representing 6.5% of her portfolio. She started buying Roku back in 2020 and then sold when price made double top, although she didn't sell much. And then, as Cathie Wood does, she started buying the falling knife. Until recently, her last transaction, she sold 2.5 million shares. But again, she still holds 10 million shares. So before we get into the analysis to see where price is heading next, I would like to go over their numbers. So Roku reported a solid third quarter results and offered guidance for this quarter. Now, mind you, Roku is still losing money. And the reason why they beat the estimates were they were lousy estimates, for lack of a better word. So third quarter loss per share of $2.33 was worse than the analyst expectations of a negative $1.96. Revenue for the quarter came in at $912 million, ahead of consensus estimates of $855.1 million. So it was a mixed quarter based on EPS not meeting estimates, but revenue meeting and exceeding estimates. So stock was boosted after Roku said it expects its second quarter, or the fourth quarter rather, be a record Ebitda of $10 million, which is a surprise given the analysts were expecting a loss of $57.6 million. So that's why we saw the gap higher in price. It's all about the forward guidance. Here's what the company said: we remain cautious amid an uncertain macro environment and an uneven ad market recovery. As we indicated earlier, we remain committed to positive adjusted EBITDA for the full year 2024 with continued improvements after that. So here's what two analysts had to say. An analyst at Oppenheimer said the upside was primarily driven by cost efficiencies. While still early, now integrated with more than 30 programmatic partners driving meaningful sequential revenue improvements. Then you had another analyst at Pivotal Research. They saw enough in the report to raise their recommendations on Roku shares to a hold. At current price levels indicated in the pre-market, we view Roku as reasonably valued. Alright, so now we can get into the analysis. We'll start with the monthly chart like we usually do. And price on the bottom back in December, January at the $40 level. Again, let's scroll down to the weekly chart. We did have a resistance support band at roughly $75, right? Support, resistance, support before it broke through. Really making this band no longer valid, but we'll just keep it on the charts for now, because what could happen is we could get a pullback before eventually retesting the $100 level. Why the $100 level? Well, not only is that a psychological round hole number, but that's where we had support, resistance, resistance, right? Now this weekly bias at $53 was formed back in January. You had a rally in price, basically candle rally higher. Price came into the zone back in May, penetrated the zone roughly 50%, making this zone still valid. And then again, most recent, last week, price came into the top of the zone, and then on earnings shot higher. And you can see that from the daily chart based on these gaps. And with the gap higher, and then another gap on Friday, price closed above the moving averages. You're starting to see the 13 and the 26, which is the blue and the orange, start to turn up. These are more so your momentum indicators. Um, and if as time goes on, you may have a depth cross where the 50, the red, crosses over and down over the 200-day, or under rather, the 200-day moving average. Depends on what price action does over the coming weeks. But nevertheless, the momentum is to the upside. Look for a price target at the $100 level. Thanks for watching. Subscribe. Please like the video.